Good morning. Today we are doing cases on direct tax cases for May 2017 as per revision test papers. Okay, first one. Okay, the first case. Now there are 9 cases added for your exam. So let's do the first case. Many of these 3-4 cases have replaced the cases which we have already discussed in class. So please concentrate. First one is Society for Promotion of Education. Now this case is based on registration relating to charitable trust. Now what is the time limit to register or to make application? No time limit. But what is the time limit for CIT to pass the order for accepting or rejecting? 6 months. So write down first point. For the Society for Promotion of Education. Write down first point. The time limit available for accepting or rejecting the application for charitable trust registration is 6 months from the end of the month. 6 months from the end of the month in which application was made by the SSE. Application was made by the SSE. Now, is this limit mandatory or not? There was one case law earlier that Karimangalam, that huge name, that as per that case law, this 6 months limit is not mandatory, which means even beyond 6 months, the CIT can accept or reject it. Now, as per this case law, new case law, Society for Promotion of Education, that earlier case law has been replaced. And what is the conclusion? Deemed registration provisions apply, which means if CIT does not pass any order, then it will be deemed that the trust is registered. So write down second point. If CIT does not pass order, within 6 months, then the trust is deemed to be registered. So for May exam, if this particular issue is asked, so which case you are going to quote? That Karimangalam case or this Society for Promotion of Education? This latest case has to be quoted. Second case is St. Peter's Educational Society. Now, have we done one case law, that Queen's Educational Society? So this is in continuation of that case. So this case has not replaced that case. So in this case, we have to give reference of that Queen's Educational Society also. So we'll write down, don't worry. Word imparting education, training in specialized field like communication, advertising, etc. and awarding diploma certificate constitute an educational purpose for grant of exemption under section 1023C(6). Now first we need to understand what is this 1023C. It is exemption to which type of institutions? For funds, but for funds you right now ignore. So 1023C(6) is for medical and educational institutions. For profit or not for profit? Not for the purpose of profit. So write down first point. Exemption under section 1023C. Exemption under section 1023C is available for educational and medical institutions. Is available for educational and medical institutions which are not for profit. Second point. In this case, In this case, the society was training students in specialized fields like communication, advertising, etc. And giving diplomas and certificates. Full stop. Next point. The income earned did not exceed the cost of training, hostel expenses, etc. Now, what was this type of institution? It was providing which education? Specialized training. Like, for example, you have these all different classes like NIIT and all. Those who provide training in that specialized sector. So NIIT is relating to information technology. So here, is NIIT eligible for 1023C? No, but why? Because it is for profit. In this case, it was giving training in specialized fields. But was it generating profits? What is given? What was the last point we wrote? That income did not exceed the cost. Means it was not for the purpose of profit, but it was giving some commercial training, in the sense that training was required so that the employees would get jobs, or those students would get jobs. So will exemption be allowed or not? Or exemption will be allowed only to schools and colleges? Is it an educational institution? Is it running on profit motive or non-profit motive? Non-profit. And is it providing education? So how that education will be utilized, like whether it is college or school education, or because of that education you are going to get jobs, that is immaterial. Since the basic conditions are fulfilled, the Peter Education Society was eligible for the exemption. So write down. Since it was not for profit, comma, exemption would be allowed. Even if the students were trained. In specialized fields. Okay. GMCS said it's doubtful. GMCS is outsourced to persons, na? So do they do it for profit or not for profit? For profit. If there is a corporate trainer, so corporate trainer will he be eligible for this institution doing corporate trainings? But if it is running not for profit, then it would be eligible because it is providing specialized knowledge. Then there is education and not for profit. So exemption would be allowed. Next one, Rayala Corporation Private Limited. This is again a new case law. Now, have we done, okay, this St. Peter's Educational Society, which is a similar case law for this Queen's Educational. Rayala Corporation Private Limited, we have done that Chennai Investments. What is that case law name? Check up. Chennai Properties or Investment. So in your case law book it is given. Chennai, both property and investment both hai. Chennai Properties and Investments Limited. So we have done that case where it was given that if income is earned, a rental income is earned from property and the business is to give it on rent, then which type of income will arise? Business income. Similarly, check out what is given here. Would rental income from business of leasing out properties be taxable under the head income from house property or profits and gains of business or profession? This is a Supreme Court case law and it has finalized this entire controversy that when rental income is earned by a company or any person whose main object is to lease out the properties, then income would be taxed under the head income from business. So write down rental income from leasing out properties. Rental income from leasing out properties would be taxable under the head profits and gains of business and profession. Profits and gains of business and profession if the main object of the company is leasing out the properties. Now, what if it was house property income? What difference it would make? Only 3 deductions available. Which are the 3 deductions? Municipal taxes paid, then standard deduction 30% of NAV, and third is interest on borrowed capital. But since it is a business income now, what would be the implication? All business deduction including depreciation allowed. So write down all business expenses would be allowed as deduction. So here which case is referred? Again similar case, Chennai Property and Investments Private Limited. Next one, Shashun Chemicals and Drugs Limited. Okay, now what is section 43B? Okay, now here 3 sections are referred. First tell me 43B. Deduction allowed only on payment basis, means it should be paid either during the year or by the ROI due date. Is bonus to employees covered here? So bonus should be paid by what date? ROI due date. Then only it would be allowed as deduction. Second, for bonus, is there any specific provision in section 36? Bonus or commission would be allowable only if it is not paid as profit. And third is 40A9, that whenever you make payment to a trust which is for the benefit of the employees, then it is not allowed as deduction. So if you make payment to employees, will it be allowed as deduction? But if you make payment to the trust, not allowed. Now check up. In case where payment of bonus due to employees is paid to a trust and such amount is subsequently paid to employees before stipulated due date, would the same be allowable under section 36(1)(2) while computing business income? Now what was done here, I'll just explain the case. In this particular case, there was litigation going on with the between the assessee company and the employees relating to payment of bonus. Have you heard of such cases where they don't accept the bonus, but it wanted to claim the deduction? By which due date it should have been paid? ROI due date. So what it did, by ROI due date, the employees were not accepting money. So it transferred that money to the trust, which was for the benefit of employees. And immediately on the next day that issue was resolved, trust immediately made payment to the employees. So will 40A9 apply or section 36 apply? What is section 40A9? If payment is made to a trust, then it is not allowed, disallowed. What is 36? If payment is made to the employees, then bonus would be allowed. And as per section 43B, it will be allowed only if it is paid within ROI due date, which is the stipulated due date here. So here, common reading of 3 provisions. First, by ROI due date, it was paid to whom? Trust. And on the next day next to the ROI due date, it was paid to the employees by the trust. So will it be allowed as deduction? Yes, it was given that it was allowed as deduction because it was given to the trust, but ultimately the benefit was to whom? Employees. So for only one day it was given with the trust. So that trust was acting as an intermediary. And why it paid to the trust? Because it wanted the deduction. If it paid one day after directly to the employees, then it would be amounting to what? Payment after due date. Then it would have been disallowed under section 43B and allowed in the next year. But this year you had to make that assessee had to pay the tax on that amount. Have you understood this? 3 points. First point, write down. As per section 40A9, as per section 40A9, payment to trust relating to employees is not allowed as deduction. Is not allowed as deduction. Full stop. In this case, second point, in this case, bonus was paid to the trust on ROI due date. On ROI due date, as there was dispute with the employees, and the company wanted to claim deduction of bonus as per section. So which section was referred here? 43B, because payment is required to be made by ROI due date. Next point. On the next day next to the due date, the trust paid bonus to the employees. It was held that such bonus would be allowed as per section 36, read with section 43B. As per section 36, read with section 43B. So 40A9 will apply or not? No. And here which accounting concept is used? Substance over form. What was the form or how it was rooted? That company to the trust and trust to the employees. But what was the substance of this transaction? Company to employees, and it was deemed to be paid within time and deduction was allowed. This is a very important case, so you mark it important, because lot of 3 sections are referred here. Institute's favorite cases where multiple sections are referred. Are you going to write in exam only these 3 points? Then what you are going to write first? You explain 40A9 first. Second, 43B and 36. You explain the legal provisions. Then whatever is given in the exam, you explain that case in point form. Then you quote this particular case. Now, is it compulsory to quote case laws? Not compulsory, but if you want to score full marks, you have to quote. And then you have to write the conclusion. Next, VS Dempo Company Limited. You have to tell me this is similar to which case law which we have already done. In case where depreciable asset held for more than 36 months is transferred, can benefit of exemption under section 54 EC be claimed if capital gain on sale of such assets are reinvested in long-term specified assets within specified time? Which one? Rajiv Shukla case. So what is given in that case? So same conclusion in both the cases, that even if the gains are short term, if the asset is held for more than 36 months, which type of asset? Depreciable asset is held for more than 36 months. The asset would be long term, therefore exemption would be allowed. So write down. In case of depreciable assets, in case of depreciable asset, the gains are deemed to be short term. The gains are deemed to be short term. However, if it is held for more than 36 months, it would be a long-term asset therefore exemption would be allowed under section 54 EC. So which is a similar case? Rajiv Shukla. But Rajiv Shukla, which exemption was claimed? 54F. So if in exam 54F case is asked, then you have to quote which case law? Rajiv Shukla. And in case of 54 EC, VS Dempo Company Limited. We had one more case of VS Dempo. That demurrage paid to non-resident person who is engaged in shipping business. So 195 does not apply. Do you remember that? Yes, you write down near that VS Dempo Company Limited case for section 54F. Rajiv Shukla case. For section 54F, Rajiv Shukla case. Next, Meghalaya Steels Limited. Okay, now is subsidy taxable or not? Subsidies, capital subsidies taxable or revenue? All types of subsidies are now taxable because it is covered in the definition of income. But three types of subsidies are not taxable. Personal subsidy like LPG subsidy. Second, for subsidy received for purchase of fixed assets. So what we have to do? Reduce from the cost. And third one is the amendment in this year. Subsidy given by the central government to notified funds and institutions. Now check up this. Meghalaya Steels Limited, this has overruled the earlier case law. Can transport subsidy, interest subsidy and power subsidy received from government be treated as profits derived from business or undertaking to qualify for deduction under section 80 IB? So are these three subsidies taxable? Transport subsidy means what? To subsidize the transport cost. Interest, same to subsidize interest, and power subsidy to subsidize the electricity cost or power cost. Are these three subsidies taxable or not? Yes. Since they are taxable, they will be taxed under the head business income, and since they are taxable in relation to specified business, deduction would be allowed under section 80 IB. That's the new Supreme Court case law. It has overruled the earlier case law in case of this Meghalaya Steels Limited. So write down transport, comma, interest and power subsidy were in the nature of reimbursement of cost. They were connected with the business of the assessee company. Therefore, such subsidies, business of the assessee company, full stop. Therefore, such subsidies would be taxable as business income. Full stop. Since they were related to business, comma, deduction under section 80 IB would be available. available. Okay, next particular case, Trans-Asian Shipping Services Private Limited is based on the concept of tonnage taxation. So for regular batch students, we have already done this, but fast track batch students can read this from the practice book. Two problems have been given on this. So tonnage tax is like presumptive taxation. So presumptive taxation relating to Indian companies which is into shipping business. So they have given certain rates. So what do you mean by tonnage? The weight. Is it the weight of the ship or the capacity of the ship? Capacity. So the income depends on the capacity of that particular ship. So first we write down introduction about this particular provision. Write down first point for the Trans-Asian Shipping Services Private Limited. Tonnage taxation provisions will apply for Indian company engaged in shipping business and having at least one qualifying ship. At least one qualifying ship. The company has to get certificate certifying the net tonnage from specified authority. Okay, now the case is on the point of slot charter. Now what do you mean by slot charter? What do you mean by charter? Taking on rent. So if you have chartered a vessel, means what you have taken on rent? That entire vessel. Slot charter means only part of that vessel is taken on rent. So if there is an Indian company which is having one own ship, खुद की one ship, plus it has taken a slot charter in another ship, tonnage tax provision will apply only for own ship or other ship also? Own ship it will apply. Will it apply for the slot charter? Now this tonnage tax income is dependent on what? The net tonnage of that, net capacity. In case of slot charter, are we owning or are we having the control of the entire ship? So can we use the benefit of tonnage tax scheme for slot charter? It was held that yes, it is available. As per the Supreme Court case law, it was held. So write down second point. The assessee company had one qualifying ship. Into bracket own ship. In addition, it earned income from slot charter. That is, part of the ship taken on hire. It was held that provisions of tonnage tax scheme will apply to slot charter as well. Now, if it is own ship, okay, is it done, everyone? If it is own ship, then what you are required to take? Certificate. In this case, can you take certificate only for that slot charter? So it was held by the Supreme Court that even in case of slot charter, tonnage tax provisions will apply and certificate is not required. So write down the requirement of taking certificate. it is dispensed of. Requirement of taking certificate is dispensed of. Okay, now we have last two cases. On both are based on some celebrities. So which is the first celebrity case? Subrata Roy, and second Amitabh Bachchan. So Subrata Roy, if you remember, he was underground for some time. He was not shown in the media. He was not available anywhere. No, but uske pehle. So this case law relates to that era. So we'll write down because this is relating to High Court decision. Write down. First point for Subrata Roy case. High Court of Allahabad. High Court of Allahabad passed the order. Passed the order. And thereafter recalled its order. Recalled its order. Now, can High Court review its own orders? Have we done one case on that? Yes, second point right down. While recalling the order, it referred the provisions of Code of Civil Procedure. Where it was provided that where appeal is heard ex parte, where appeal is heard ex parte. What do you mean by ex parte? Into bracket, without the other party. Without the other party, comma, and judgment is pronounced. Against such party. Means who is the other party here? Subrata Roy. And judgment was in whose or against whose interest? Subrata Roy. Then against the respondent or against the other party. Against the other party, then such party can apply to court for rehearing. Supreme Court held that. Okay, now again, have you understood the case? The case High Court order was in whose favor? Department or Subrata Roy? Department. But did Subrata Roy or his advocate counsel attended or not? No. So what was held? It was ex parte order. So the Subrata Roy demanded that it should be reheard. So again a rehearing was done. So now tell me, in case of High Court judgment, is it ex parte order or not? Is opportunity of being heard given? Yes. Yes or no? Obviously, when appeal order is passed, the other party has to appear before. Then only the order will be passed. So right on next point, Supreme Court held that the order of High Court was valid as the counsel. The counsel. What do you mean by counsel? Advocate or counsel / advocate of Mr. Roy. Counsel or advocate of Mr. Roy had attended the proceeding. Therefore, it cannot be said to be ex parte order it cannot be said to be ex parte order, and rehearing cannot be demanded. And rehearing cannot be demanded. Okay, so if you want to summarize, you can write on the top of the page. First, tell me what would be the first event before High Court passes order. Which authority might have passed the order? ITAT. ITAT order is passed. Then, who attended the proceedings? Advocate attended and gave submissions. So maybe even if he has attended once, it means he has attended. And then what did High Court did? High Court passed order in whose favor? In favor of department. So can this High Court order be called to be ex parte? No, why? Because already counsel, even if attended once, so High Court's order is not ex parte. So what is the conclusion? Rehearing can be demanded or not? No rehearing can be demanded by Mr. Roy. No rehearing can be demanded by Mr. Roy. If you have analyzed all these cases, RTB cases, they are not so simple. It's not one line conclusion which we are writing. Lot of things. And next case maybe we have to write the entire assessment procedure, revision procedure in this. Next Amitabh Bachchan case. Is it done? Okay, now Amitabh Bachchan case I'll explain first. Now, he had filed original return. Then in the original return he had declared some amount. Then what he did, he filed a revised return. And in the revised return, whatever income was submitted, he claimed 30% as expenses towards security. Now security expenses would be allowed or not. So it again depends. So allowable or not allowable. So original ROI was filed. Then what was done next? It was revised. In original return was a deduction claim relating to security expenses? No. But in revised it was claimed. Then assessment was done by this AO. In the assessment, AO said that you give us proof of this 30%. At that time, what was the reply given by this assessee? That I cannot justify this claim because all the expenses were made in cash and there was no evidence available. Understood the case or not? Originally, were the expenses claimed? No. In revised return, claimed. Could the expenses be proven in front of the AO? So, what reply was given by this assessee? That I take back this revised return. I am withdrawing this revised return. So now, whenever expenses are incurred and if they cannot be justified, then it will be unexplained expenditure and it would be taxed at what rate? 30%. But AO did not do that. AO just gave a notice that we want to tax it. But AO did not pursue further. And then CIT under section 263 wanted to revise this order because it is prejudicial to the interest of revenue. So can he do so? Yes. So can you take a stand that since AO has not taxed it at 30%, it can't be taxed further? It means AO has accepted that stand. No. So again I am asking you, first, in the original return, were the expenses claimed? In the revised return, claimed. Then what was done next? Assessment. In assessment, what information was asked for? About the proof. But could the proof be submitted? Then what was the response by the assessee? We are withdrawing this revised return. Actually, there is no such provision that I can withdraw. There is only one provision for withdrawal of application in advance ruling. Only in advance ruling you can withdraw. Otherwise, you cannot withdraw the return also. Once filed means filed. Then ideally, what he should have done? He should have taxed that unexplained expenditure at 30%. But he did not do that. So CIT found that this 30%, because of this 30% excess deduction available or made or which was allowed, the order was prejudicial to the interest of the revenue. So can he revise that income under section 263? Yes. So write down first. Correct, but he said that you withdraw. See, in revised return, this particular deduction would be allowed. So deduction has to be disallowed, plus that income, that amount has to be taxed at 30%. So double deduction, double taxation. Write down first point. In original return, expenses towards security were not claimed. Expenses towards security were not claimed. In revised return, 30% of the receipts, was claimed as expenditure for security. Then next, during assessment, AO asked for evidence about the 30% expenditure, which could not be given as the payments were made in cash. Therefore, AO wanted to tax such expenditure. Under section 69C, as unexplained expenditure. Into bracket at 30%, but did not do so and passed the assessment order. Stop. Then what CIT did? CIT under section 263 revised the AO's order as it was erroneous and prejudicial to the interest of the assessee. Prejudicial to the interest of revenue. Supreme Court held that. So directly now see this what CIT has held. So in favor of department or assessee? Department. Then assessee again filed appeal to ITAT, High Court, Supreme Court. So now the final stage, which this conclusion we have to study, ITAT, High Court or Supreme Court? Supreme Court. So write down. Supreme Court held that the order of CIT under section 263 is valid as the AO was ignorant about the unexplained expenditure. Also, opportunity of being heard was given. Also, opportunity of being heard was given to the assessee before passing the revision order. Before passing the revision order. Understood this? Yes. Now quickly tell me what is the format of solving 4 marks case law based question. Are you required to write in paragraph form? It is better you write in point form, so it is easier for the examiner also to understand. First 1 or 2 points what you are going to write? Provision, legal provision on the basis of which that case law is framed. Then for 3-4 points, facts. So whatever is given in the paper, that you have to write in short, you have to explain that case. Then 2 points, you quote the case law. So you quote the case law and what was given in the case law, and 8 point would be the conclusion. So if you write around 8 to 10 points, then you can easily score 3 marks, minimum 3 marks. And if you quote the case law name correctly, then you can score out of 4 out of 4 marks. Understood this?